them to nothing but providing financial aid to families that want to send their children to Pinecrest. It's phenomenal. Just a few things, and let's see.
I gotcha.
Okay. I want to just hit some highlights just to get y'all further inspired about the program overall, and then I want to, now you heard the way to be a humble learner is to ask me questions, so I'm expecting a lot of questions. But we are one of 21 states. It's okay.
Sorry, give me a second.
No problem. And I'll just tell you all that,
Always.
that this program started in 2008. And Georgia was the 6th state in the country. I think Arizona was first, then Pennsylvania, Florida, there were several other states, but we were number 6. And that was pretty impressive. Our state lawmakers were very creative and very tuned in to this possibility early on and got this passed back in 2008. Since then, there are a lot more states that have gotten on board. Now 21 states have this kind of program. I'll just stop for a minute. We can concentrate.
I don't have airplane for this. It says head of school, but I don't have.
No.
It was working, y'all saw it was working.
It was working. It was so good.
The video real fast.
Is it?
That shouldn't be TV.
Input label.
I can just push the, if it needs to be there, I can just push the little buttons.
It might be easier, yeah.
Clearly, he needs to just sit over there.
He wants to be there. That's right.
That's all you have to do is scroll.
Or I can just push the arrow. Probably. Yeah.
Okay, we got it.
Oh, I gotcha.
There we go.
Wow. As you see, 21 states
Thank you.
now have this
Sorry, Trump,
program.
I wanna take that
Yeah,
message
get
out.
rid of that.
But amazingly, y'all, Georgia's has been called the best law of its kind in the nation, because some of these laws kind of come with strings attached. You know, you can do this, but there are certain requirements. The school has to behave more like a public school. And that was one of the greatest fears in the beginning about private school communities participating in this. They thought, if it's gonna come with strings attached, we don't wanna do it. But we have been successful in staying very pure, very free market driven in Georgia. It's just a wonderful thing. And thankfully, in 2018, we were able to get the cap increased from $58 million to $100 million. If you participated in it before that time, you might remember it was so popular, you would apply for $2,500 and you would only get approved for about 50 cents on the dollar, because there were twice as many applications for tax credits as there were tax credits available. So right now, anyway, everybody's getting approved for the full amount that they ask for. And the good thing is, Josie, I'll tell you this, there are still some tax credits left for 2021.
Okay.
So if you have not participated yet for this year, this is a really great time to do it, because the closer, if you applied now, you'd get approved, and you would literally have till the end of the year to write your check or use a credit card. Then you can turn right around and file your taxes, and that money's gonna come back to you in a refund, or if you owe money, it's gonna offset what you owe in taxes.
Sure.
So, let's see.
Yeah, I think in earlier cases, you had to apply in advance to get the,
Yes.
yeah.
And we still encourage that, and we
Got
think
it.
we'll get back to that.
Got
I'm
it.
sorry, Joan, I'm gonna be so lame and not able to do this.
Push it up, push one finger, slide it up. No, no.
So I'll just, again,
Lisa, can you?
It's a
Oh,
two-finger
no.
slide. Two finger slide.
okay. So it's working for Georgia. Now I have to slide again.
Two finger. There you go.
Okay. Uh-oh, and I don't think that's gonna show up. You know what? Let me talk. I wanted to tell you a few things that have just become known about the program, because we've been in place almost 15 years now, and there have been independent studies that have begun to be done on the program. And one was just done by Kennesaw State University late last year by their Education Economics Center. They studied all the programs and GOAL in particular, and they determined that based on the fact that it only costs taxpayers about $4,000 per child through this program to educate a child in K through 12 education. But in a public school, it costs taxpayers about $12,500 to educate a child, because the state funding alone is $5,500, and then the local property tax base is another $6,000 or $7,000, and then there's a little bit that comes from the federal government. So this program alone, they deemed in the most recent year that data was available, saved Georgia taxpayers $53 million. That's just 1 year. And then we studied they studied the GOAL database to see what the actual high school graduation rates and the college attendance rates were for kids on GOAL scholarships as opposed to kids, their public school peers. Kids are graduating high school, if they're on GOAL scholarships, 99% of the time in 4 years, just as they should. In public school, it's 82%. Now that's a higher number than it has been in recent years, so that's pretty good. Then they drilled down further and they said, let's look at the most economically challenged kids that qualify for free and reduced lunch. Those kids on GOAL scholarships are graduating, 98% are graduating in 4 years from high school. Only 77% are graduating from public high school in 4 years. Then they looked at college attendance rates. 87% of GOAL scholarship kids are going to college immediately following high school graduation, whereas 68% from public schools are going to college right after graduation. Then looking at that lowest income group, there's a 26% point differential. 84% of free and reduced lunch recipient kids are going to college immediately, and only 58% of those kids graduating from public high school are going to college immediately. Obviously, they're in a college preparatory culture, and there is, it can be argued that their parents are more motivated. There's a million factors, but honestly, there are plenty of motivated parents who've got kids in public high schools, but you know that the other influences and the other cultural dynamics are going to affect whether these kids are motivated and graduate on time and go to college. So the fact that those outcomes are higher for kids, also they said that 1 year's worth of kids would save the state an additional $66 million in future economic benefits because of the increased earning potential and the successes of those children, as opposed to the fact that they might go in a different path and require social services instead of contributing their own funds to the state. Good morning, thanks for coming. So let me see if we've got any of this data. Oh, look, there it is. How about that? So there are the really pretty charts showing the high school graduation rates and the college attendance rates. And then, just to give you a snapshot, an idea of what's been accomplished through this program since it was founded. The map of Georgia, I always put that up because when we get down to the legislature, we hear so many untruths. There are so many lobbying organizations working on behalf of teachers' organizations in public schools. I don't believe that public school teachers would say this stuff, but their lobbyists do. They say, this program's only benefiting a few kids in metro Atlanta. It's just not right that we put our Georgia taxes into this. Well, that's not true, y'all. It is an all of Georgia program, and this just shows the number of scholarships by Georgia region. More than 50,000 scholarships, more than 20,000 students. $215 million is what we've spent so far just from GOAL, and we're one of 30 student scholarship organizations. Y'all know GRACE is a student scholarship organization that works with most of the archdiocesan schools. So the average scholarship award is just over $4,000. The average adjusted gross income of the recipient family is, when adjusted for family size, is just over $28,000. That's another thing we hear. The opposition to the program says this is just going to rich kids who would be in private school anyway. Well, that is not the case. And then 46.3% are going to, of the awards are going to non-white students. That has really increased over the years. It started out, about a third of the scholarships were going to students of color, and this year 48.5% of the scholarships were expended that way, which is wonderful. This is just a further breakdown of the race and ethnicity of the scholarship awards and the awards by income category. This chart looks just like it's supposed to. Most of the dollars are going to the families with the greatest need. And thankfully, though, our law does allow for exceptions. I mean, it doesn't mandate that you have to be making less than a certain dollar amount. So when a family has a hardship, a job loss, an illness, they maybe look on paper as if they made a generous amount of money, but they may absolutely need financial aid to put their kids in private schools, and the program allows for that, which is wonderful. So let me just tell you this. This is really amazing to me. We survey the scholarship recipient families about every 2 or 3 years. We just did it in the spring of this year, and for the first time ever, we asked families, what is the reason you wanted to put your child in a private school? Why did you want this scholarship to attend private school? Better education, as you might imagine, is always at the top of the list, but for the first time ever, seeking a religious education tied for the #1 reason that parents wanted this scholarship for their children. I just think that is profound and meaningful right now and what we are all experiencing, and I am very heartened to see that. Of course, there are tons of other reasons. Smaller class sizes, improved student safety is always near the top, but religious education is incredibly meaningful. And then we ask, I'm probably walking out of the view. Then we ask to try to get a gauge, we want to make sure parents are happy with this. I mean, you're getting this financial aid, you're going to a private school, but how do you feel about that? So we asked the same question in 2 different ways. How satisfied were you overall with the last public school your child was attending when you started before you started using a GOAL scholarship, and it was a 4.69 on a scale of 1 to 10. And then how satisfied are you with your child's private school on GOAL this year? And it was 9.24. Then we said, relative to your previous educational experience, how satisfied are you with your current private school experience? Y'all, 99.1% were satisfied, with 84% of those being very satisfied. Nobody was very dissatisfied, and less than 1% were dissatisfied. And that was thousands of respondents. So that is very encouraging, and it speaks volumes about what y'all are doing. You are offering the choices that parents want, and it's just a beautiful thing when they can access your school. So, any questions about that stuff, y'all? Let's get into, I was doing so well. Now I'm not, here we go. Charlene. I froze it. Okay, now let's get into the nuts and bolts of how we can fill up a bucket with money for Pinecrest. To be able to do all of that, to be able to extend your mission, give parents access to your school, continue to generate those incredible numbers and statistics and benefits for Georgia. So it's always been this way. Ever since the law was passed back in 2008, these are the limits that individuals and corporations can contribute to this program in exchange for a 100% dollar-for-dollar tax credit. If you file a single return, you can contribute $1,000. That's the most it doesn't have to be 1,000, but up to 1,000. If you're married and file a joint return, you can contribute $2,500 and get a 100% tax credit for that amount. Actually, this $10,000 opportunity came about in 2013. So about 5 years after this passed, we were able to get the state legislature to amend the law by saying if you own a pass-through business, you can claim up to a $10,000 tax credit. Works exactly the same way as for individuals, but you can claim up to a $10,000 tax credit because the revenues flowing through to your personal tax return from your business are what you offset the tax credit against, and they give you a more generous opportunity. The main reason they did that, y'all, is because they give a hugely generous opportunity for C corporations. Those are businesses that file their own income tax returns as opposed to a pass-through business where they file an informational return, but they don't pay taxes themselves. All the earnings flow through to your return, and then you pay the taxes. But corporations that pay their own taxes have always been able to contribute up to 3/4 of what they owe in taxes in exchange for a tax credit on this program. I think our lawmakers thought that that's where the funding for this program would come from. That a few big corporations, like it works in Florida, because Florida doesn't have an individual income tax, so a few big corporations consume the entire amount of this program, tax credits in Florida, and their cap is $876 million.
Wow.
And every year that it's met, they have what's called an escalator, and every year that it's met, it automatically increases by another 15%, which is why they have such a huge amount. Ours is $100 million, and we are always striving to get it increased to a higher amount. But what's significant, I say this for the business owners in the room, what's significant is that during this year, good morning, there was a law that was passed, not specifically related to this program, but it directly affects this program. That's one of the things I want to talk about. Okay. It is going to really benefit business owners, pass-through business owners, because of an opportunity you have. And that really doesn't have anything to do with the GOAL tax credit at all, but it also is going to give you an opportunity to make a much greater impact on the GOAL tax credit program, the GOAL program, as a pass-through business owner. Let's see. Rats. Okay, those aren't showing up, so this is really tricky to explain, but let me go for it. This is what this law is called, HB 149, and this is the reason for the law. If y'all remember back in 2018, there were tons of new federal tax regulations as part of the Tax Cuts and Jobs Act, and the biggest deal that I think affected everybody was they said, you are limited to what you can deduct in terms of your state and local tax payments. SALT, remember that? SALT deductions can be no more than $10,000 for anybody. So that was really hard, especially for business owners whose businesses are taking in a lot of revenue, and they're having to pay a lot of state income taxes, and they're limited to what they can deduct. The IRS said all along, if it's a corporation and the corporation is paying the tax, they can deduct all of their state tax payments. But individuals, where the revenues are flowing through to the individuals, they're limited to $10,000. So late last year in 2020, the IRS released a notice saying, we're going to allow businesses, pass-through businesses, to pay taxes themselves. If states want to pass a law that makes that okay, we are okay with it. And they can deduct 100% of their state tax payments, the businesses themselves. And we don't have a problem with that. We aren't putting a SALT deduction limit on businesses. So that's what happened. Georgia is one of now 15 states that passed a law to benefit pass-through business owners, to allow them to take advantage of what the IRS telegraphed that they were okay with. So, I know, it's just hard to understand. So, as a pass-through business owner, you've always, you get a K-1 most of the time from your business. It tells you how much income you have to report on your personal tax return, and that's what you're going to pay tax on. Now, you can make an election to actually pay that tax at the entity level. So you'll be filing an entity return, and you'll be paying all your taxes, your Georgia taxes, at that entity level on the entity return. And you're not limited, you can deduct all of the taxes. And then what flows through to your individual income tax return is dramatically reduced by virtue of that big deduction. So that means you pay a lot less in federal income taxes. Y'all, and it's a detailed thing that I don't know if it's on here. Yep, it is, but it's really hard to see. But let me just tell you what this is. This is an example that our CPA firm put together, very straightforward example of a business with a $1 million Georgia taxable income figure. And in the first scenario, they pay the tax at the entity level, and in the second scenario, they don't. They treat it just like they always have before, where it flows through to their individual return. And the bottom line is they owed $57,500 on $1 million worth of taxable income. That's at Georgia's tax rate of 5.75%. And they were able to pay $43,000 worth of that, 3/4 of that, to Georgia GOAL, because they're now treated like a corporation. 3/4 of the tax revenues can be contributed to GOAL, and the rest of it goes to the Georgia Department of Revenue. Scenario 2, they didn't do that, they just paid it at the individual level. The bottom line difference is it saved taxpayer number 1 $21,275 by paying the tax at the business level, because they could deduct all of it, and it reduced their federal taxable income. No difference in state taxes. They're going to pay the same state taxes either way. But scenario number 1, where number 2 guy could only pay $10,000 to Georgia GOAL, number 1 guy could pay $43,125 to GOAL, because they could pay 3/4 of their entire Georgia income tax liability to Georgia GOAL. And it's treated just as if they paid their taxes. the statute, this is another miracle, I believe. The statute where HB 149 was passed literally has written into it the code section for Georgia Goal. It says 0.75% of the, or 75% of the tax liability can be met by contributing according to this code section, and it's the code section for the education tax credit. I know.
That's awesome.
So we, at first, were worried about this. We thought it was gonna take away our beloved pass-through business owners that have been contributing $10,000, but now we realize it allows them to contribute even more. In the last 3.5 weeks or so, we've gotten, I'll just give you 3 examples. A phone call from a person who always signs up for a $10,000 tax credit, called back and said, talk to my accountant, I'm changing it to $60,000. Another one called back and changed it to $130,000. And another called back and said, I think we're gonna do $450,000. So it's extremely exciting because one of the few times we've been able to say this is a tremendous benefit for the business owner. It will save money for the business owner. Everybody who's a business owner should talk to their accountants, their tax preparers about this and say, run the numbers for me. With what I project that we're gonna be making this year, should we file at the entity level or should we file like we always have, you know, with that money flowing through to us? And what would be the cost savings to me? So that's decision number 1, and that will likely benefit you as a business owner. But point number 2 is, now you have a much more robust and powerful impact. You can have a much more robust and powerful impact on this program. There are really, really wonderful things about this, which means we could use up all the money much earlier in the year, filling up the buckets of money for schools in time to provide, you know, financial aid for the incoming school year. Right now, we are still nibbling up the $100 million cap for 2021. But getting it early in the year helps. It helps, right, Joe? It helps school communities to plan and budget and offer financial aid for the incoming group of students for that academic year. The only downside is it could put us back in the situation that we used to be in, where it's so popular, everybody applies in advance, and all those credits are gone and almost oversubscribed on day 1 of the calendar year. But we are working really hard to get a cap increase for this year in full awareness of the fact that that might happen, but really not for that purpose. The reason we're trying for a cap increase is because there's never been a more important time, I believe, and I'm sure y'all agree, for parents to be able to say where their children should go to school. There are dramatic differences in opinions and perspectives as to what children should be taught and exposed to on a daily basis. And it's almost as if now the public schools have said, send your kids to us and we will tell them what we want them to think. And that's just not okay. You should be telling your children what they need to think and what they need to believe. And schools should be teaching them the academics that they need to know to thrive in society. And we all know it's not working that way in many, many cases. And you also know they need to be surrounded in the faith and educated in the faith, or it's just too likely that they won't stay in the faith or fully embrace the faith. And so I just am so passionate about this year of all years. And 21 states that now have this program, there were 10 of them. That very first slide that I showed, there were some green boxes on there. It said yes, yes, yes. There's 10 states that have expanded their school choice programs this year. And this is being called by a number of publications and by some foundations as the year of school choice. So we're really trying to, I hate to use the word exploit, but we're using that in any way we can to inform our lawmakers. We'll probably be reaching out to you guys to ask you to please inform your lawmakers and reach out to them and tell them how important this is. They hear so much from folks that don't like this program. They need to hear from folks that see what this program is doing and how it is benefiting Georgia and families. So the great news about that original, let's see. Yeah, let me see if I can show this to bring the point home. Right. So that original chart that showed what the limits are by tax filing status, they're still the same for single and married filing joint taxpayers, and they're still $10,000 for pass-through businesses that are going to pay their taxes as they always have, with the earnings flowing through to their personal returns and then paying them at their personal income tax level. But for pass-throughs electing to pay their taxes at the entity level, their contribution opportunity is now the same as C corporations. 3/4 of their income tax liability can be contributed to Georgia Goal. Now, I would be conservative. I wouldn't, if you're not sure what your liability is gonna be, come down a little bit, because if you miss the mark and you contribute too much, they won't let you take that as a tax credit. So be conservative on that, but still could be a lot more generous than the $10,000. And if you, and there's a long way to go before you get to this point, I realize, and please call us, please have your CPAs call us. We are so happy, we're doing this all day, every day now. We are talking to CPAs about this. It's so new that they're, in many cases, and they've got a tax filing deadline this week, October 15th. In many cases, they are saying, no, wait a minute, my client told me about this, and what is this? What's going on? I think we've been out in front on this because of the good impact it has on our program. So we are happy to have conversations with them. We're doing a lot of this. We're having a lot of luncheons for CPAs, informing them about this, and they're enthused because they like good news to share with their clients too. And y'all, this is nothing but good news. It's nothing but cost savings for their clients. So it's one of those things where if they don't get on the bandwagon, they're gonna be looking bad in their client's estimation next year when clients are realizing, hey, I could have saved thousands of dollars by paying my taxes at the entity level. But if you decide to do this, and if you decide your business is gonna pay tax as an entity, when you come onto the Georgia Goal site, you're not gonna be applying as a married filing joint taxpayer anymore, or a single taxpayer. You're gonna be choosing that button that is C corporation, trust, or other entity. You'll be applying as your business. So, LSEOs, you'd be applying with the name of your business and the federal ID number of your business. And then you'd estimate what your tax is gonna be, and then you decide how much of that, up to 3/4, you wanna contribute to Georgia Goal. And we're in 2 phases right now. We still have a track running for 2021 tax credits because there's still about 13 million out of the 100 million left. I know we will consume them all. Last year at this time, we had slightly more than that, and we consumed them all. Well, we consumed 97 million last year, which in 2020 was pretty good. Yeah. But I think we'll meet that whole cap this year based on what we're seeing in momentum. And then we're also collecting applications for 2022, which we feel like they're gonna go much faster next year because of this HB149 opportunity. So that's another path. And when you come onto our website, you will see application for 21 or application for 22. And if you've already done it for 21, obviously leave that one alone. But if you have not,
So when you say website, are you referring to the Pinecrest website? or
The Goal
Georgia
website.
Goal website?
But you can get to the Goal website from the Pinecrest
Okay.
website as well. And I'll send out the link. So,
and, yeah, go
one
ahead.
question, so the House Bill 149, that doesn't start until
2022. Yeah.
Okay.
So it's effective in 2022, and you would be estimating now, let's say you estimate that you're gonna have a $100,000 tax liability, then you could contribute $75,000 to Georgia Goal. And if you're really sure about that, go for it. If there's just some uncertainties about that, you may wanna bring it down and contribute $50,000 to Georgia Goal or 40, but you still have that opportunity. And if it's not all gone on day one, and then you realize halfway through the year, I underestimated, we're gonna have a lot more, then you can take another bite at the apple. One thing I really wanna show y'all, we have worked together for a long time, which is wonderful. And this is what Pinecrest has achieved year after year in contributions, goal contributions designated for your school. Way back, up until 2015, that was when you were getting approved for 100% of what you asked for. In 2015, the numbers dropped off because there was proration happening, as I mentioned before. There was oversubscription of the program. So you were getting approved for only fractions on the dollar for what people were requesting. Then in 2018, though, it went up. Actually, it was 2019. So you had a nice bump in 2019, almost back to your previous levels, because you were being approved for 100% of what you asked for again. As you can see in the last couple of years, there's been a drop off in terms of we just aren't filling up the bucket with what we want to fill up the Pinecrest bucket with, to give you that source of financial aid for incoming families. And y'all can turn that around. Here is another little slice of the same data showing you the number of contributors. So that's the answer. So I would say talk to your friends and neighbors and your colleagues and the other parents and just say, y'all, this thing works just like it's supposed to. It's been around for a decade and a half, and we've only had 2 complaints since the beginning of time, and it was from retired people who got excited about this, grandparents, but they weren't making any money and they weren't paying any Georgia income taxes. You do have to be paying Georgia income tax to take the credit. So if you're working and you're paying Georgia tax, this is a program that just works exactly like it says it works. There's no gotchas, there's no pitfalls. So that is it. Other than the questions, yes.
I have a question. So
Good.
I want to make sure I understand, let's just say you're estimating to have 10,000 in Georgia, Georgia taxes for the year. If you file just on your personal return, pass-through income, and it ends up you only pay 9,000, you only owe 9,000, you'll get the $1,000 you can carry forward to the next year, apply to the future year. But if you do as a pass-through, as a file a separate entity return, and ignoring the expense from the CPA as the separate return, if it ends up you only owe 9,000, you're losing that $1,000.
That's such a good question. You're so smart. But actually, if you claim this credit as a pass-through owner, whether or not it's flowing through to your return and you're doing the 10,000 that way or paying at the entity level, there's no carry forward opportunity for pass-through owners. There never has been, ever since 2013 when they put this in the law. That's the one thing where they said, okay, we're gonna give you a more generous opportunity, but be careful and be reasonable with your estimates, because if you mess up, we're not gonna let you carry it forward.
So there is no distinction.
There's no.
So that's just if you're not doing
Yeah.
the entity at all, it's just at the $2,500.
Then you can carry it,
then you get to-
yeah. If
and
you
it's
don't have a
10,000.
pass-through component to it, yeah, then you've got 5 more years to take that credit. They allowed that because the numbers were smaller. I've learned that our state budget office, our lawmakers, they hate carry forwards. They hate it because they feel like they can't get their arms around what the budget numbers are gonna be in that year because they've got all this sneaking up behind them. They'll allow it in dribs and drabs, and to them, the 2,500 is tolerable, but when it gets to those bigger numbers, they aren't allowing carry forward opportunities.
So then, is the real distinction then just having an additional return between? doing
The
it
real
as a-
distinction is, yes,
I mean,
having an additional return. So you file that, you file an informational return anyway. This time, there's gonna be a tax due button at the, or a field at the bottom, and there's gonna be a check cut that goes with that return. And then the K-1 that comes to you, instead of saying what your Georgia taxable income is, it's gonna say for Georgia, 0. And you'll just plug 0 into your Georgia return as a result of your pass-through business. Your federal K-1 will have a much lower number on it than it would have otherwise because you've deducted all those state income taxes at the entity level. So it's really, instead of one K-1 with the same number on both, you're gonna have a Georgia K-1 and a federal K-1, 0 on the Georgia, a much lower number on the federal. So the real difference is it's gonna benefit you. If it doesn't benefit you, I would not do it.
Right.
It's gonna save you money. I wouldn't. I would keep doing it the same old way. If you got a loss, just do it the same old way. But this way, that's the main difference. And I'm sure in this first year, your CPA, if you've got one, is probably filing your informational at Form 1120S. That's what it's called for an S corporation. They're filing that anyway. It'll have a new name this year if you're electing to pay tax at the entity level, and they'll fill that out. I don't think it should be that much more work for them. And the main thing is saves you money and a bigger contribution opportunity to this program.
So the election is an annual election?
Annual election.
Every year you have to make that election?
Exactly right, exactly
You
right.
go the other direction.
I
every
wish.
year.
Well,
If you decide to pay as an entity this year, you can always change it.
Absolutely.
subsequent years.
That's right.
No penalty.
that's right, no penalty. You can change it year to year to year. Once you make the election, and I don't know, I think you have to make the election by the end of the year.
Mhm.
Once you make the election, then you can't change your mind. Like in April, when you're filing your tax return, you can't say, do over, but you can change it for the next year.
So if you're making the election, what's the deadline? Is it up until you file the return, or is
That's
it
a
calendar
great
year?
question. I do not know the answer. I'm gonna figure that out. I don't know the answer to that. One thing about this, full disclosure, y'all, the Georgia Department of Revenue hasn't released their regulations on it yet, I talked to the guy in the law and policy section there, who's become a good friend over the years. They're done. They're in the highest levels of review at the Georgia Department of Revenue. He even called me about a couple of points he was worried that we would have an issue with. And we also, at our CPA firm, Bennett Thrasher, a partner there has been on the committee to review the regulations, and he said there's no gotchas and there's no surprises. But I don't know little points like that yet.
So I'm assuming you can double dip, right? You like
Yes.
pay the taxes at the entity level, and then portionally you can do another 2,500.
You're smart.
Right.
Yes, yes. You've never been able to do that before, pass-through business owners, but now you can. Corporations have always been able to do that. You know, corporations can make a contribution, and then everybody that's running the corporation can also make a personal contribution. And now, owners of pass-through businesses can absolutely do that also. And then you do have the carry-forward opportunity with what you do personally.
So I'm assuming if you're a sole proprietor who has been doing a Schedule C,
Yeah.
there's no reason you should form like a partnership like S Corp and run it through that way, right?
Probably.
If you elect
It will probably benefit you to do that. That's what you need to talk to your CPA about,
Okay.
because you get back all those deductions that you've been losing.
Right.
Mhm. And it's just a matter of some technicalities
Right.
to change. My husband has a law firm, doesn't make a lot of money, but he's, because he works for us for free, but he is saying, maybe I need to change my form of business so that I do have this opportunity. So Bennett Thrasher's helping him figure out, yeah, I think that's the way to go for 2022.
Don't go
Smart,
away.
great question.
Don't go away. So
Okay.
there's two parts to this program. I hate to put you on the spot, Joni, but I'm gonna put you on the spot. So if you are a parent in our community, so Lisa's talking to you about your personal state tax liability and how you get to decide where those funds go. Like, that's huge. That's awesome to have that freedom. But I would think you'd also be curious about the other side, how it's awarded, how do we use those funds? Because as a member of our community, you get two benefits. You get the personal benefit of directing your state taxes, and you also get to help your school grow and provide scholarships for our current student body. So as quickly as you can you just talk about your end of GOAL as far as how we manage it or how it benefits us? Joni actually received the GOAL award for being top administrator of this program. She does a great job. So I think you'd want to know, like, what happens at the other end? Can you come on, stand up and come over to the, sorry, I should have given you some preparation, but.
Do the best I can.
Yeah.
So we award somewhere between 70 and 90 GOAL scholarships annually. The average award here at Pinecrest is about $4,000 to $5,000, very similar to the state averages that you referenced. So how do you qualify for a GOAL scholarship? Well, there's two different ways. Our itty-bitties automatically qualify. What I mean by an itty-bitty is our pre-K 4 through first grade. Those children qualify automatically if they have a need. So a need has to be demonstrated through our financial aid or our award system, and we use SSS by NAIS. As you referenced, you know, the income levels kind of go up and down, depend on personal circumstances, and we work very closely with all of our families on their tuition assistance applications to identify those areas of struggle so that we can help our families the best we possibly can. When you get past second grade, the child has to be in public school prior to coming to Pinecrest, and that would be a public school in the state of Georgia. And there is a window, it's about 6 weeks. So a child can't just sit in a public school seat for a day, like the first day of school, withdraw, and say, now I want to come to Pinecrest and be eligible for GOAL. It used to be that way in the beginning of the program. That's been modified, and it's about a 6-week period of time that a student would need to be sitting in a seat in a public school in order to qualify. Again, based on need for a scholarship at Pinecrest. You saw that chart that looked at how the dollars are coming in for Pinecrest. We award somewhere between $215,000 to $260,000 a year in the scholarships to our students. And you noticed that chart was going down where we pulled in a little bit less than what we awarded. So we do keep a pool in our GOAL scholarship fund in order to help us to continue to provide the awards to our students. We're really excited about this opportunity because the GOAL scholarships that we award really does help us in our mission. It helps us bring students to our school. It helps us provide them with the Pinecrest education. So we're really excited with the opportunity that's presented to us that we're going to be able to fund this program at a higher level, allowing us to further impact our students. I'm here all the time, so if there's any questions on, how do you apply, what's the process, or even if just, this is what my situation looks like, do you think that there's some sort of eligibility, just let me know. We'll work through the numbers and see what we can do. We just want to help as many families as we possibly can. Are there any questions for me?
How do you apply?
So we utilize a third-party system. It's called SSS by NAIS, and the link is on our webpage. It's under the admissions tab, under
No,
tuition
just, I was
assistance.
asking, how do you apply for the, for,
I do that for you.
okay.
I actually, once a family applies for tuition assistance
No,
through
no, I'm not asking
SSS.
about the tuition assistant for the contribution. How do
Okay,
you
the
apply?
contribution. So there is a link, again, on our website. It's under our giving tab.
Okay,
And if you follow that tab, it'll take you directly to the GOAL website.
okay,
Mhm.
got it.
And I'll follow up too and send everyone the information, the slides, a link to the website.
And that's where there's because you apply for two things, right? You apply to give
Right.
and you apply to get.
Right.
So the apply to give is under the giving section of our webpage, and the apply to get is under the admissions and tuition assistance portion of our website. But there's nothing our families need to do in order to apply for the GOAL scholarship. I do that on behalf of all of our families. And I do it annually to renew on behalf of all of our families as well.
And she's so good, that's why she won the award. It's perfect,
And from the
perfect.
goal perspective, if Pinecrest gives 200,000 Pinecrest family, does it go into a general goal fund? It goes 200,000 coming back out to Pinecrest as scholarship?
And
Nothing against BT or anything.
no, it goes to, absolutely goes to Pinecrest, and they have, it's like an online savings account. They look at their balance every day, they see exactly who's putting money into it. Y'all have a Schwab account, don't you? Okay, and as Joan mentioned, you hold some back to be cautious in the event that the numbers go down, and we invest that on your behalf. We pay the investment advisory fees, but all the investment earnings also accrue to your account balance and grow your numbers. So more scholarships are able to be provided by the returns on that balance, which is
So
good.
You're paying
when
the
you go and you
school anyway,
apply-
right? So you're not paying the department, you're directly paying the school. So the
Yeah.
money
When you
is
go
going
in to apply, it asks you for the school that you want to direct your funds to.
Jen, our model is built on we want them here all the way up through 12th grade, because that's where our mission's gonna be realized on the back end, and so Jen does a really good job of making sure those tuition dollars follow a kid throughout their journey. And that regardless of what the legislative changes might be down the road, that we have reserved to support, because we feel like we're making a commitment to the
Right.
families. So,
That's great.
So I will be following up with all of you and actually the whole community with the slides and with video. If there are any other questions, please talk to your accountants, please spread the word.
Yeah.
It's kind of a no-brainer. You're paying these taxes anyway. Wouldn't you want to say how they get spent,
yeah.
right?
I know I had a number of families say they couldn't make this window, so we'll get your video out and probably share your email
Yeah,
Yeah.
please do.
contact or whichever one you want us to share.
Yeah, that email and
Yes.
phone number that was on the end of this presentation's fine.
Yeah.
And I have a feeling that when the accounting profession gets done with this week, with the October, that this is historically what happens. Then they catch their breath for a day, and then they start getting into this kind of year-end tax planning, and this is gonna really hit them front and center, probably because we're gonna be bombarding them with it too, starting
Yeah.
next Tuesday. But questions coming from you, their client base, is even more important.
Right. And the other piece Lisa mentioned about trying to increase the cap, they need to hear from us, and their organization sent us a link with a form letter. We just fill in a few things, and we can send it to our governor and our congressman, and it's real easy to do, so I'm gonna forward that as well. If you would like to have your voice heard, it's gonna matter, it's gonna help us in the long run. So I'll include that as well.
Thank you.
Could you also please include the deadlines for 2021 and 2022?
Yes, all that's on, I think, the website, and there's like a tab, one is for this year, and then there's another for everything else.
And I'll tell you, for 2021, their only deadline is, you have to be approved by the Department of Revenue, which means they've got up to 2 weeks to process the application that we send to them.
Good.
And then you also have to make your payment by the end of the year. So you could really wait till mid-November, the end of November, even mid-December, but it gets scarier toward the end, just as they're gonna get in time.
Good.
Lisa, who was driving this HB 149 bill?
Good question. It was Chairman Bruce Williamson from Monroe. He's the chairman of the Income Tax Subcommittee of the House Ways and Means Committee. And it was just one of those, I'm not sure how he got so well versed in this, but I think that they were targeting the financial gurus in state legislatures, or he was probably going to meetings with other state representatives with expertise in the same thing. Drafted a very straightforward bill, very straightforward, just saying you've got this election. I mean, the bill's only 3 or 4 pages long. We've got it on our website. And it sailed through the House with only 1 dissenting vote and sailed through the Senate with no dissenting votes. If it had been about this program, that would not have been the case. But we just were watching from the sidelines going, is this gonna happen? This is phenomenal.
Right,
Yeah.
right. Okay, well, thank you.
Thank you.
Any other questions? Okay, well, thank you so much. Please have some treats, coffee before you go, chat amongst yourselves, whatever you need to do. Thank you, Lisa.
Thank you.